let's jump right into this. We've got a highly concentrated global macro and technical explainer lined up today to get you perfectly positioned for the trading session ahead. We have a ton of ground to cover, from a seriously volatile overnight session to the exact technical setups you're going to need for today. So let's get into it.
Okay, check out this number, 5.2%. The sheer scale of the bond market tantrum we're seeing right now is just staggering. The 30-year Treasury yield surged right past that 5.2% mark, hitting its highest level since 2007. And why? Well, Chair Kevin Warsh and the Fed delivered a hawkish hold in a 9-3 vote, keeping rates in that 3.5 to 3.75% range. But here's the kicker. Absolutely zero forward guidance. The message was loud and clear. They're giving us the facts, not a trailer for the future. They are aggressively reviving that higher for longer narrative, for sure.
And ma'am, that lack of a roadmap from the Fed triggered some massive divergence across global assets overnight. It's like a giant puzzle out there. Wall Street plunged over 1,100 points as markets tried to digest the silence. Over in Asia, South Korea took an absolute beating. The Kospi crashed nearly 17% over 2 sessions as those crowded AI and semiconductor trades unwound violently. Meanwhile, with Middle East escalations and sharp warnings from President Trump, Brent crude spiked right past $90 a barrel. But amidst all this red on the screens, Indian markets basically danced to their own playlist, bucking the trend and actually closing up over 1%. No way, right?
So what does this all mean for your Catalyst calendar today? Well, with the Fed playing the silent game, economic data has officially inherited the starring role. Here's how the timeline maps out. Volatility is going to strike first with Eurozone GDP and inflation prints in the morning. Then, we roll straight into the Bank of England's rate decision and Governor Bailey's remarks. But the main event, the grand finale everyone is literally waiting on the edge of their seats for, is the critical US core PCE and Q2 GDP data dropping later in the session.
Section 1. Major Currencies Technical Outlook. Let's drill down into the tactical setups for the DXY and the Euro.
Let's start with the dollar index. Despite taking a sharp fall right after the Fed's announcement, markets are currently pricing in a 63% probability of a September hike. Because of this fractured, hawkish pause, the DXY remains a clear buy-on-dips play while we wait for those US PCE inflation numbers. Right now, support is holding pretty firmly in the 100.46 to 100.57 zone. If we get a bounce, look for resistance at 101.89 and then further up at 101.41. Moving to the euro. Sure, it jumped sharply on the Fed hold, mostly aided by some profit booking, but make no mistake, this pair remains a sell-on rise. We're looking at a backdrop where European yields are hitting decadal highs. German 10-year bunds have climbed to 3.18%, and Italian yields just hit 3.98%. On the technical front, the pivot sits at 1.1508. Resistance is capped at 1.1483, with downside supports targeting 1.1447 and 1.1388, which of course will heavily depend on today's incoming Eurozone GDP data.
Section 2. Major Currencies Technical Outlook. Next up, we're looking at the GBPUSD and USDJPY. All right, let's talk about the pound. The pair definitely moved up sharply amidst the broader dollar sell-off, but you really need to notice what's happening with UK 10-year gilt yields. They're pushing past 5% right now, driven by global yield surges and domestic fiscal concerns. Because of this dynamic, the pair is still a strong sell-on rise. Today is massive for the pound. We're expecting a hold from the Bank of England, making Governor Bailey's forward guidance the absolute key trigger here. Watch for resistance at 1.3367, which lines up nicely with the 21-week moving average, and then 1.3393. Support sits down below at 1.326.
And then we have the yen. The Bank of Japan is honestly stuck between a rock and a hard place ahead of tomorrow's rate decision, where consensus is heavily leaning towards a hold. The pair has been trading in phases, basically ranging between 162.71 and 164.11. Selling around that 164 resistance area allows you to place a very tight stop, just in case real intervention buzz materializes if we break above 164.11. So, the tactical view? Trade this with tight stops and wait for clear direction from the BOJ. Section 3. Indian markets. Let's pivot to the USDINR and the Nifty setups. What's really interesting here is the USDINR setup. Heavy foreign equity inflows are absolutely driving the action, pushing the rupee to a near 3-week peak, touching 95.49 earlier in the session. We're seeing traders actively trimming their bearish positions right now. Technically speaking, your line in the sand is the 95.67 pivot. A close below this pivot is a clear signal to sell and rise. We've got supports mapped down at 95.43 and 95.21, while on the upside, resistance is sitting at 95.82 and 96.18.
And finally, let's look at the Nifty. I mean, this is a market that is just completely ignoring the global gloom out there. Bolstered by over $1 billion in foreign buying this month alone, the Nifty gapped up and actually held on to it, rising 1.1% to 24,250. That's its biggest daily jump since mid-June. But a word of caution, it's hitting some stiff resistance exactly at the 24,278 pivot. If that breaks, it opens up a run to 24,344 and 24,561. Downside supports rest at the 24,080 21-week moving average and 23,900. Since this really isn't a positional market just yet, the clear tactical view remains. Keep it strictly intraday.
Which brings us to the most crucial question of this session today. Are your portfolios braced for the US core PCE data shockwave? With the Fed flat out refusing to provide us with a forward-looking roadmap, incoming economic data has officially taken the steering wheel. So how are you actively adjusting your stops and tactically bracing your portfolios heading into the US prints today? Take these levels we've covered, stick to your intraday discipline, and trade the facts as they arrive. Good luck out there.